Good morning and welcome to the 8th meeting in 2014 of the Finance Committee of the Scottish Parliament. Could I please remind everyone present to turn off any mobile phones or other electronic devices. Our first item of business this morning is to decide whether to take item 3 in private. Are members agreed? Members have indicated their agreement. Our second item of business today is to take evidence from the Scottish Government's Fiscal Commission Working Group as part of our scrutiny of the Revenue Scotland and Tax Powers Bill. I therefore would like to welcome to the meeting Crawford Beveridge and Professor Andrew Hughes-Hallett. And I understand that you've both got short opening statements. So,
thank you, Convener. We really appreciate the opportunity to speak to you today. Our appearance is obviously on behalf of the Fiscal Commission Working Group, and we really welcome the opportunity to share some of the thinking around the principles of tax design. I know that Professor Mirrlees, who's a member of the group, has spoken to you before on a slightly wider basis, and we noted with great interest the experience he was able to bring. The working group is a subset, as you probably know, of the Council of Economic Advisers, and it's been established since March 2012 and was basically tasked with trying to design a robust macroeconomic framework for Scotland post-independence. We've published 4 reports to date, which I'm sure if you are trouble sleeping, you've managed to work your way through over time, focusing on currency and financial sustainability and the fiscal framework. And perhaps most relevant to this committee is the paper that we published last November, setting out the principles for a modern and efficient tax system in an independent Scotland. This report, together with the 3 other publications of the working group, provides a clear blueprint for a comprehensive fiscal framework for an independent Scotland. Our work was not about particular tax rates, so we haven't tried in any way to suggest what specific taxes should be where or at what kind of rates. It was really a framework for designing a system which can meet the objectives of the government in the most effective and efficient manner. It focuses on a set of clear principles: simplicity, stability, neutrality and flexibility, with some, I suppose we should say, apologies to Adam Smith and his tax provisions, which we recommend the Scottish Government should follow in pursuing these objectives. We recommend that tax policy, though, should form part of a much broader whole systems approach to formulating policy, taking advantage of Scotland's size to streamline institutions and decision-making, and focusing on the objectives of taxation and welfare across the entire public sector and beyond, which we think could provide Scotland with a significant international advantage. Our report made clear that there is significant room for improvement in the UK tax system, which, like many others in the Western world, has grown like Topsy over the couple of hundred years since they've been introduced. And it also stressed the importance of ensuring individuals and companies pay their fair share of taxes in the system, and highlighted the opportunities of using the tax system to make Scotland a more competitive environment. Such a system would be a tool for promoting economic growth, attracting quality jobs, and perhaps importantly tackling inequalities across Scotland. Now, we didn't specifically cover the Revenue Scotland and Tax Powers Bill, as you may know if you've read through any of the report. Our work focused mainly on high-level principles of taxation generally, but we hope that perhaps it can be used to inform your committee's work on this bill, and we certainly welcome the opportunity to discuss the implications of the proposed framework. Andrew.
Oh, that happens automatically. I have very little to add to that. It was a collective view from the working group. Given the various principles for taxation which were mentioned, at least 4, sometimes you can add 1 or 2 others, it's not going to be possible ever to design one system which is going to satisfy all of them perfectly simultaneously, so there's obviously a trade-off. So not only is there a question of the policymakers fixing tax rates and so on, we don't suggest anything like that. The priorities that you would use is also for the policymakers, so we can point out some of the pluses and minuses in different regimes, but not the details. And I think in terms of a wonderful review of the principles behind it, the evidence you had from Professor Mirrlees a couple of 3 weeks back, was very good. There's little that you can add to that. 1 or 2 points you might pick up on, but in general I think he's done a wonderful job there, so I don't want to add any more.
Okay, well, thank you very much, gentlemen, for your opening comments. It's very much appreciated. Now, obviously, at your submission, obviously there's a lot of discussion about the referendum issue, independence, but we're not really here to ask about that, so we'll be keeping the questions to the issue of the bill before us. I might disappoint some of the folk in the gallery there, but never mind. So, just to fire on, in terms of submission, in paragraph 619, you state, and I quote, "A simple tax system is one in which tax rules and obligations are well known, easily understood, and liability is clear." But of course, as you touched on, the United Kingdom system is very complex. I think there's somewhere in the region of 11,400 pages of tax law. And indeed, you go on to say the UK tax system is complex and costly, and studies have shown there is a considerable room for improvement in its design and operation. So, in talking about designing a tax system for Scotland, what pitfalls are there to be avoided?
Well, I think I'll let Andrew talk for himself here, but I think what we were trying to say in this was that people need a degree of certainty about what's going to happen with taxes going forward. And particularly that's the case, as you know, for businesses. We've seen a lot of discussion in the last few days about the oil industry, and they're obviously very keen to make long-term investments and have some certainty about what the tax system is going to do to them. So we were trying to say that it was important that people understood, on what basis they were going to be taxed, whether it's an individual or a company. And they understand certainly that over time taxes do change because circumstances change and there needs to be flexibility in the system. But that by and large we ought to have some clarity about how things are going to work into the future. And to the extent that you can simplify these things, then you also have an opportunity for efficiency in the system that would allow the cost of taking taxes to come down dramatically from the rather complex way that we do things today, and particularly in the need for large numbers of accountants to help us get our taxes into line. And so that was all we were trying to say, really, was that you can't do that overnight. You can't take a very complex tax system and change it on day one. And I think, as Professor Murley's probably mentioned, we were looking at probably being a kind of 10-year horizon to be able to solve the tax system and get it into a much better format, but that it was worthwhile trying to get into that kind of simplicity.
Thank you, Professor.
Yes. Simplicity and the flexibility, of course, are likely to conflict a bit, and you want both, so this is where one of the trade-offs comes, and it's difficult to manage. It's hard also, particularly hard to set out a set of rules ex ante as to how you're going to manage that trade-off, because if circumstances change, you might want to manage it in a slightly different way. The certainty part, or the clarity, I think people want clarity about the system itself and how it works, rather than rates. You can't give them that. At least, you don't want to make forecasts of what you're going to do because your forecasts are always wrong. So you want to say, here's a set of principles and possibly some contingent rules, one of which might be that you can establish a presumption, but not necessarily a rule that's hard and fast, of small changes rather than large changes, so you get a gradual evolution if possible, known in the literature as tax smoothing, and that's a popular idea. And the only thing I would quarrel with Crawford about is whether it grew like topsy or it's like Heathrow Airport. The problem is every time you face a new demand or something, you add a little bit on and you end up walking down extremely complicated passages and so on. It's much easier to have a clear system if you actually start with a concept and try and design it from there. So work down from the specific, work down from the general to the specific, rather than go adding bits onto the specific. So there's an opportunity here which I would underline.
Yeah, to basically start from scratch. I mean, one of the issues I think which causes great concern, indeed anger among the public, is avoidance, of course. And for every new rule that seems to be brought in to reduce avoidance, new loopholes appear to develop in terms of the UK system. And there's a perception among many that there are individuals who are not paying their fair share of taxation. How would you develop a general anti-avoidance rules in a kind of Scottish context in order to ensure that we do have the kind of fairness which everybody feels the tax system should deliver?
Sorry, I'm taking notes at the same time so I don't forget. At my age, the memory is not what it used to be, as my kids tell me. I'm not sure how to answer that one, really, because you're really getting into the nitty-gritty of the administration, implementation, and presumably tax law. And I find it difficult to talk about with lawyers about the law because obviously have a different perception. The one thing I would say is if you focus on simplicity, you have a good chance of getting higher compliance. First of all, because it's more difficult to wriggle around, and secondly, because people know in advance there are certain things which are doable and certain things which are not, which are laid out. And that's much easier in a simple system. And I think the same thing applies if it's relatively simple. You can see the degree of fairness or otherwise rather easily. And so the incentive to wriggle around things, because you quote in your case, it's not quite fair, is less. So I think, without going into any specific rules and administrative arrangements, I would go for the simplicity as a way of trying to characterize rules that would help us to avoid avoidance.
If I could maybe just add, I mean, I thought the example that Jim Murley's used on the property transfer issue, where, you know, if somebody decides that there are differential rates and therefore they can split up the property and buy it either in sections and so on, you know, there is some stage at which you're never going to stop somebody with larceny in their heart being able to get around the system, right? It's they're going to find a way to be able to cheat it no matter how many rules you put in. I think it's helpful to maybe start with the principles of what you're trying to do and make sure that people are clear that there will be somebody watching to make sure there aren't ways in which we will get around those things. And at a certain point, trying to enforce them has probably become more expensive than the tax that you're actually able to take. So I think we just need to get to, as Andrew says, something that's as simple as possible and that people understand what we are trying to achieve, and that they you know, just hope for the best as people try to find their way around things.
I mean, I think one of the issues is, of course, is that sometimes in terms of taxation, the absolute letter of the law is used as opposed to what the meaning behind the law clearly is, and that's obviously was had an influence in the interpretation in the kind of very famous case involving Glasgow Rangers Football Club just a year or two ago. Just moving on, in A2, the summary of principles for a modern and efficient tax system in your paper, Chapter 2, you talk about it is essential to consider the entire tax system rather than just one element. Now, obviously, this is a kind of a framework bill to a large extent. I'm just wondering if you feel that the bill actually does that.
I have to tell you, I'm not expert on the bill. I read it for the first time this week, and it was long. And I think the bill was certainly trying to set out what you're suggesting. But you know, it's as I say, we did not specifically discuss it in the working group, and so we haven't really had the time to think that through at all. I mean, I'm sure we can ask the working group to take a look at it if you wish, but I think, you know, Jim Murley's is probably the most expert of our people in this particular area, and I suspect the information that you got from him is as good as we're going to get.
You have, you know, as I said, this is not going to be about independence, this discussion, but you have said in Chapter 5, independence would allow for the redesign of the tax system according to specific Scottish circumstances and needs. Taxation is a key lever in competitiveness, economic growth and tackling inequalities, and plays a key role in a robust and successful macroeconomic framework. But do you believe that a bill such as this can deliver such a framework now, which can be adapted if there is a yes vote in the referendum, but at the same time can still deliver in terms of devolved competencies?
As far as I could tell from my reading of it, it was trying to put together a bill that was not only going to affect the two specific issues you were talking about now, but had the ability to be expanded to take on other levels of taxation if these were devolved to the Scottish Government. And it seems to me it's gone quite a long way in being able to do that. And so I don't see why there shouldn't be an opportunity to do exactly what you're saying and being able to adapt other things to the specific circumstances of Scotland.
Just lastly, because I'm going to open out to colleagues around the table who will have their own questions to answer, of course, you've also talked in your paper about better linkages and streamlining of organisations involved in setting tax policy, implementing tax policy, administering tax collection, linking to business policy, welfare policy and linking to environmental policy. How can that be worked together through a bill such as this?
I think it goes to Crawford's previous point. Really, if you take the bill as now, and in terms of what you're looking at now, not very much. But you want to frame it in such a way that you have the potential to do that in the future, because those are the issues which are going to come up. Whether we're in a position to actually influence those other taxes is another matter. But you certainly want to be in the position. You don't want to be framing a bill after the event, saying, "Oh, gee, we've got these other taxes. Let's see how we link them with everything else," and not have the framework in place to do that.
Okay. Mr. Beveridge, anything to add there?
That's fine.
Okay, thank you very much. First colleague to ask a question will be Jamie. Thanks, convener and gentlemen. In your the Principles for a Modern and Efficient Tax System in Independent Scotland, the paper of which we have some excerpts, you highlighted a statistic that I've heard used before, and it occurred to me when I was reading it. I've just kind of always accepted it without actually assessing what it absolutely means. You say the Scottish Parliament is currently responsible for around 7% of all taxes raised in Scotland. This rises to 15% with the introduction of new responsibilities flowing from the Scotland Act 2012. What is it we're talking about here? Are we talking about 7% of all revenue accrued, or some other mechanism?
It was trying to say that the Scottish Government itself has the ability to make changes at the moment to only 7% or so of their tax revenue that comes in, including the geographic population share of oil. So this was not precise number on just without the oil revenue in there. And the Scotland Bill does allow for us to push that up towards 15%. But it's still a relatively small amount, as you're probably aware. And one of the difficulties I think we were having was that it's difficult sometimes to build a tax system in pieces like this, because sometimes some taxes will offset other taxes and cause other things to happen. I mean, a good example of that, for example, might be the passenger tax at airports, whereby even if we had control of that and said, well, we think if we were to do away with passenger tax, then there would be many more people coming into Scotland, and we'd make it back in VAT and other kinds of tax revenues that would come in. Those tax revenues wouldn't necessarily accrue back to Scotland; they would accrue back to the Treasury. So it's difficult sometimes to not to take a holistic view of things and to be able to try and figure out what you can do with some small pieces.
Thank you for that. That's useful clarification. That was my instinct. I thought it probably would be in terms of revenue, but just wanted to clarify. In terms of my next question, the summary in the same paper, you set out a key theme articulated throughout the report is that it's essential to consider the entire tax system rather than just one element. And clearly we are looking at a bill to create a body that will be dealing with a very limited number of tax. I'm just wondering how much of an issue this is, and obviously we are where we are, so how do you do as best you can when you aren't necessarily considering the entire tax system?
Good. Andrew?
It's quite. And that's the instinctive answer to that, because if you're looking at a couple of small pieces, you can't do very much with it. And I think if we're talking Scotland Act, I know the income tax bit is not with you at the moment, but it might be one of these days. The big problem, of course, from trying to use those taxes to steer the economy a bit is the spillover parts onto other taxes to which you have no access are missing. So it's a problem in running it. It's one of the big disadvantages of that way of going about devolving. But you would want, again, I say what I said before, I think you would want a system which is capable of dealing with those things and at least talking about them, if not having the capacity to look after them at some point in the future.
I mean, I heard Mr. Beveridge say that obviously we've only just recently looked at this particular bill that we're assessing just now, but in terms of your reading of it so far, and going back to my last question, is this is it doing as best it can with the powers that we have?
I would have said yes.
From what I've read, I think yes. The answer is yes. But we pointed out in this that ideally you would have tax as part of an entire fiscal system in Scotland. If you go back and say, so why do we collect taxes in the first place? One reason is to make sure that government is funded for the programs that it happens to want to run. One reason might be for transfers of various sorts, either between social groups or indeed from the today into the future for pensions and things of that nature, and one might be for tackling some kind of market failure. So it's difficult, I think, sometimes to take just a couple of taxes, as you've been doing with this current bill, and not have it be part of a much more rigorous system that attaches it to what you're doing with your budgeting system and what you're doing with your transfer system and so on. So, I mean, I think that's the main point we were trying to make, was this is one element in an entire macroeconomic system that we need to be careful. When you're just fiddling with one bit, you can only go so far.
Thank you, that's helpful. A kind of similar question, and the convener highlighted the same part of your paper and the executive summary. We'll highlight it again, where you talked about the UK tax system being complex and costly, and that there was obviously considerable room for improvement in design and operation. And the convener asked about pitfalls to avoid. I suppose that leads me to the other question, and again I take on board that you've only just recently looked at this bill, but again, insofar as you've read it and understand it, does this represent an improvement on, particularly in relation to these two taxes, does this represent an improvement on what the UK has administered?
I mean, it looked to me from reading it like it was simplifying things and making things a lot easier for people like me to understand. I mean, I don't do a lot in transferring property and so on, but I thought there was a real attempt here to simplify what had been quite a complicated system into one that was easy to understand from a principles point of view.
Similarly, and I know your recommendations about principles for a modern, efficient tax system are obviously much wider, referring to the answers you've just given, but insofar as these limited number of taxes we're dealing with here, do they meet the recommendations you've set out as well?
I think so. I think, as far as I could tell, checking them against the principles we had set down, they did well.
You would agree, Professor?
Yeah, I was going to say, in part that comes from the fact that you're able to look at this, as it were, for the first time. I know these taxes are not here for the first time, but you have the opportunity to look at them and say, is this how I would really want to use them, and you adapt the framework slightly to fit that. And you're able to do something which has not been possible before, is to say, well, we have these two taxes, can we set them up in such a way that they do what we want to happen in Scotland, as opposed to some average for a wider field. The only other point I would make on all of this is it's fairly obvious, I think, if you've listened to me before. I'm fairly keen on forward-looking analysis here. What is the implication of this and this and this in the future? So even if you don't have control over some of the things that you might, in another context, have control over, if you look at these particular taxes and look and see what the implication, if we change them or make them work in a different way, it'll have these implications, and it'll have that implication for the way in which the economy functions, or this particular market functions. You can't do anything about it because it's reserved power, perhaps, but it's good to know before something else happens, before there's a disaster or you get a wonderful windfall that you hadn't expected.
Okay, thank you very much. Okay, John, to be followed by Gavin.
Thanks, Convener. I mean, in the kind of overall scheme of things, when companies around the world, international companies, are thinking of investing in one country or another country, I mean, how important is tax as part of the whole package? Because presumably they're looking at other things, educated workforce, etc., etc. How important is tax in all of that?
So in the companies that I've worked for anyway, which is, I can probably speak to, are doing international location studies, tax is definitely fairly far at the bottom of the list. Now, and the reason is that, if you're not sure a tax regime is going to be consistent, then you need to make sure that all the other operational things pay off for the investment you're going to make in the company. Now, that changes. I've been mostly in technology industries, and so the payback time for them is relatively small for the investments that you make. When you get to an industry like oil, for example, or oil processing, or any of those kinds of things, then the payback time is much longer. And so I am sure if I had worked for oil companies, tax would have been further up my list, and the ability to predict taxes would have been further up my list. But by and large, for most companies who have reasonably short-term investment paybacks, then it's one factor that they would look at. I mean, I think you can see, for example, the effect that the Irish position of having very low taxes had on their ability to drive inward investment. It hasn't done all that they might have wanted it to do, but it was certainly a factor in getting people to look at things and say, do we pay 20-30% tax, or do we want to pay 10% in corporation tax? Has been a factor for those kinds of companies as well. However, I think it's not just the tax rate, and I think Andrew might be able to talk to this more wisely than I. It's not just the tax rate, it's how that is administered, because I think, if I recall, Germany, for example, has a relatively high rate, and yet they collect very few taxes because there are so many allowances in the middle. And so it gets, that's a condition, I think, where you get a very complex tax system, and the simpler you can make it, probably the easier it is for companies to comprehend and to add into their decision-making as to whether or not they would want to locate somewhere. Is that fair, Andrew?
Yes, that's fair. We've been in the working group too long, I think, because he's pinched half of my thunder.
I should explain, you know, I'm not an economist, I'm just a simple business person, and these guys have done their best to train me for the last 4 years, but I still fail some of the time.
I was interested because, I mean, you've got a Scottish enterprise background, I think, and therefore you've got quite a lot of knowledge of companies coming and going and what they're actually interested in, so I was interested in
no,
what
I mean,
you were saying.
it cuts both ways, because he's been in business and I've not, and so you can speak with more authority. I would have thought, how important is tax? Of course, you immediately start talking about corporation tax, because that's what grabs the headlines in the newspapers. I would imagine that's important, but not totally important. It's probably less important than the people would like to persuade you. There are all sorts of other costs and taxes, what when I'm lecturing we call non-wage taxes, costs to the employer, which are not part of the wages they have to pay out, which will be important as well. So this has to do with the competitiveness of your position if you were to make an investment here or rather there, and the wages. And of course, the ones which I think are probably actually further up the list, Crawford's list, are to do with, depending on what you're doing, but skills and education and language and the ease of doing business. So there are a lot of other factors. But tax is clearly in there. When you get into the phrase ease of doing business, it becomes a bit murky as to what exactly it is you're talking about. There is some discussion often that you have a complex tax system, that it puts people off. And that's probably true because they fear changes that are unpredictable, might be brought in without any warning. A simpler scheme would do much better than having a complex scheme in there. So it really is not so much the level of tax, but the potential for changing it, which would bother them, I would imagine. Having said that, the complexity is in terms of, as Crawford implied with the German remark, is to do with how it actually works. It's not to do with filling in forms. One of the things I like to point out is that there's actually an academic paper, which I like to push academic papers, which goes into the question of, if it's complex in the sense of filling in forms, that has apparently no impact at all in most business people's minds. It's to do with understanding how the system works. And the German remark he was referring to is the German, my numbers are a little out of date perhaps, but a couple of years back, German corporation tax rates were in the 30%, depending where you are and what you're doing, compared to Ireland's 12.5%. But they actually raise much less money by having the higher tax rate because it's got thousands of exemptions and other arrangements that you might find that you don't have to pay it, or you can pay a lower rate for some reason. All of which is, is arguable, but that takes up time. That's complexity. So a simpler rate has, as I said earlier, has the advantage that it's more, it's better for compliance reasons. People are more ready to pay. They know what it is. Pay it. There you are.
I could maybe just add, Mr. Mason, I think this is one of the things we said in the paper was that it's important when constructing a system to try and work for international cooperation, because I can assure you that almost any time a company picks a country to settle on, usually for the things Andrew said, skill levels, all these kinds of things, there are ways to structure that company that would allow you to minimize the amount of tax you get anyway, whether you call it tax avoidance or whatever. But it's just, there are lots of very smart accountants out there who can tell us how to go set up in Scotland and pay practically no tax here at all, because we can run this through subsidiaries of other places like Ireland or Holland or so on, who will gladly allow us to do that. So I think it's very important that we understand that the international cooperation in this area, if we're going to be able to get fair taxes paid in places, is going to be very, very important.
I mean, presumably it's different for a company, be it Google or something, who are just going to put up a big office in one place. So that's one decision. as compared to, say, somebody like Starbucks who want a coffee shop in every part of the world, I guess. And so presumably Starbucks would be less affected by tax rates and things, as long as they can make a profit, than the big headquarters moving around.
The reason they're less affected is because they can set up things in ways that flow their revenue to places where there are very low taxes. Yes. It's not, you've seen some of the cases of the companies here, like Starbucks, who have been under a lot of criticism because they have a very large revenue in the UK, but they don't pay very much in the way of tax in the UK, and that's because they actually take that revenue and show it up in somewhere else in a much lower tax regime. Almost every company I've worked for has employed large numbers of lawyers to make sure that revenue flows to places where they don't have to pay any taxes. Yes. And it's because there just hasn't been any international cooperation in this arena at all.
Well, that's interesting, because Professor Kay is coming next, and he's arguing that there should be more, I think, international cooperation on especially the big things like VAT
Absolutely.
and corporation tax.
Absolutely.
So is that where we're going to go, do you think, or the way we should be going?
Well, I mean, I think the question is there are a lot of countries in the world. A lot of them think by giving breaks in taxes to people that will enhance their economy dramatically, because they will get some income coming in, perhaps some jobs. Places like Singapore that allow you to put a headquarters there, and as long as you can have a certain number of reasonable level jobs there, they will give you a tax break on all your Asian income flowing in through the Singapore operations. And there will always be countries like that will not want to sign up to a totally international system. But I think at least you could get a large number of them working together. I mean, John Kay will probably know a lot more about this than I do, but I think he would argue too that we ought to try as hard as we can to get everybody to cooperate in this arena.
Mm-hmm. And I mean, the point also has been mentioned about smoothing or not having large changes in the tax system. I mean, any country would be tempted, if you suddenly see a sector making a lot of profits, kind of super profits or whatever, be it banking or oil or whatever, that you want to get in and get a cut in that. How do you balance that against?
Well, as Andrew said earlier, this is the complexity. You want some flexibility because conditions do change. I mean, and you want to be able to make sure that you are getting the right revenue and tackling the right kinds of things through your tax system. But the problem is if you make sharp shifts like that, then you don't just affect the industry that you've gone after, let's say banking or oil or whatever it is. Everybody else sits up and says, if they do that for them, what will happen to me? And so you need to be very thoughtful and planful and forward-thinking, I think, about how you would make those kinds of changes. Is that fair?
Yeah, I think the only thing I'd add to that is if you start with a small change, you can see how the reaction is. If you start with a big change, you get the reaction, and then it's too late. It may be the reaction you didn't want. So I would, if I were doing it, which I'm not going to be asked to, but if I was doing it, I would make the small change and see how people are reacting, and then build up a bit further, so that in any one time period there's not such a big change. And what's more, the firms can see what way it's going. So if they don't like it, they'll let you know, and if they really don't like it, they'll vote with their feet. But they can see how it's going, so you just go steadily.
I mean, when you say vote with their feet, I mean, if it's oil which is fixed in the North Sea,
right.
they can't exactly go
No,
away and leave it.
I'm talking in generalities.
Yes, right, sorry, yes.
They voted with their feet with the pay arrangements that they were putting on banks in London. So
right.
quite a number of funds moved themselves to Geneva.
Yes. Yeah.
And I understand that a number of them got to Geneva and, forgive me, found it a little bit boring and moved back again. So there's a lot of factors at play, but obviously the potential to move with your feet. And certainly if you look at European integration, you find that a surprising number of firms are quite mobile. Oil is one of the ones that's not, because you have to be where their oil is. Mm-hmm, mm-hmm. But factories can be deconstructed and moved somewhere else.
Although even with oil, there are choices to be made about where you pump it. And where you make the next round of investment. And if the cost of retrieving the oil and the tax system is such that it makes it much easier to do it in the Gulf or in Saudi Arabia or somewhere like that, then you could see disinvestment for a while. I mean, eventually it'll come back because they'll need to go get the stuff out of the ground. You're right, but we need to be careful that we're not causing people to make investment decisions that are against the best interest.
Okay. And I think the final area I just wanted to touch on was the suggestion that tax and welfare should be joined up together. Now, on the specific two taxes, we maybe don't have much room for that, landfill and land and buildings transaction tax. But you know, that might be something we need to look at some stage. Are there examples internationally of where it is better, it's more joined up than in the UK, or is it generally a problem it's not joined up? Or is that an unfair question?
No, it's not an unfair question. Of course, you're tempted into making amazing generalities, which are probably not terribly useful.
Not terribly, connected to the bill, really, either.
No. But
Well, okay, well,
I think some of the discussion that goes into the bill must reflect ideas on general practice and presumptions as to how things work, because that will, if you do that now, that will colour what you do later on, and so it's important to get around that. And I think welfare, yes, and I go back to the taxes being assessed on incomes and the other, what I was calling non-wage costs. So there's connections there. I think in a lot of the European countries that they link those two together, whereas here they kind of lump together without much thought, which is not thinking about it. So I think there probably is scope there. But not, as you say, with these two taxes very much, much as I should like to.
Okay, thanks very much. That's okay, right.
Thank you. Gavin, to be followed by Malcolm.
Thanks, Convener. I'll come back to the bill. Mr Beveridge, in response to a question from Jamie Hepburn, you said, I think I wrote this down right, the bill simplifies the system for people like you. Can you expand on that? Which areas of this bill simplify the system?
I was just meaning, neither of these issues that are going through on the bill are things that affect me very much at all. But it did seem to me that I had never quite understood the system before in Scotland, and I read the bill and I understood what they were trying to do. So if I can do that, and they're not areas that are particularly of interest or expertise for me, then the others who need to make use of these particular taxes will presumably understand them much better than I can as well.
Okay. But which parts in particular did you feel simplified matters for you compared to the existing system?
Yeah, it was just perhaps I just hadn't spent enough time understanding how these taxes work today. But what did happen was that I read through it and I thought, okay, now I understand exactly how these things work. So it was just a generic answer rather than a specific, because I had never really studied those taxes before, but they did seem like they were fairly simple, and I'd always heard people complain about them in the past.
Okay, thank you. In terms of the bill, in your view, should this bill look at purely the two taxes that will be devolved from April of next year, or should it be looking at setting up a longer-term framework?
I think as long as the principle behind it, as I read it, was that they were trying to make sure that the bill allowed for other devolved taxes, if they came along, to be treated without going back to square one again and starting all over with a new bill. And it did seem like it met some of the tests around simplicity and neutrality and so on for those kinds of areas. So it did seem to me it was set up for other things to come along.
Okay. In terms of in a more general proposition, I'm interested in answers from both of you. To what extent should tax legislation be in the primary legislation as opposed to covered by secondary legislation and regulations? How do you, in your view, how should that balance be struck?
It's nice, this, because you're able to open up on areas that you know nothing about. Not being a tax expert or one who's worked a lot on that, it's difficult to know whether you're talking sense or not. But my sense is that it should definitely be set up, as I said before, forward-looking, so that you have the general principles in the primary legislation, and I don't think you can legislate on presumptions as to how things are going to work, so that has to be in secondary or in the implementation and practice, the regulation part. So if that's what the bill is going to end up doing, then I think that's progress to be made, because, of course, with the passage of time, other things having happened, it's very easy to say, well, we have a little bit of extra legislation to say you can't do this and you must do that. And if you don't have the principles laid out there, then that can become a muddle. So the way of separating it like that perhaps means that the simplicity will last longer.
I think that's right. If we can get the principles into primary is one thing, but your flexibility obviously goes down the more specific that you put into the principal legislation, because you're going to have to go back and go through the process of changing it with another bill again later on. So it does seem to me that the opportunity to do most of this stuff in regulation would be much wiser than putting it all into the principal legislation.
Okay. Do you have a view on how the balance has been struck in this bill?
I don't, honestly.
Okay.
No, I think we'd have to be more expert to give you a useful view. I mean, I can give you any views you like, but a useful view. We're not expert enough.
Okay, sure. All right. Can you give me some general thoughts then on a general anti-avoidance rule? I mean, that's a measure that I think has attracted the most discussion within the bill thus far. Can you give me your views either on how it's framed in the bill or more generally, if you're not able to comment on the specifics?
As I said to the convener earlier, I mean, I think they've done as good a job as you can do in the bill of trying to make sure that the principles are laid out. What's very difficult is that this is a bit like, hacking in computer systems. That if somebody is bound and determined to get round the law as it's written, they will do everything they can and spend lots of money to go and get it done. I don't think you can stop everything that is trying to avoid. I think all you can do is try to lay out what it is you're trying to achieve, and to make sure that there is enough scope in the way that you've written it, so that if somebody goes definitely against the spirit of what you were trying to do, there may be an opportunity to tackle them on their avoidance. Is that fair, Andrew?
Yes, it's fair. Again, I find it difficult to comment. In general terms, it seems fine, but I'm left wondering what specifically is going to happen, what specifically can be done. And it's probable that you can't really answer that question in the context of framing a bill on Revenue Scotland as such. The one issue that came up which caught my attention was whether there was scope, or whether it was sensible to have, I don't know, a set of guidelines when Revenue Scotland is up and running, a set of guidelines as to how they view what can be done and what cannot be done. I'm hesitating because you don't want to get to the point at which it looks like ex-ante deals for your best friends are being done. But if there were some sort of general guidelines that, this is regarded as okay and that is not, which is coming from them, rather than just as a matter of practice, this firm got away with that, and therefore we can try the same. Whether that would be helpful, I would imagine it would be helpful. It might be a bit difficult to craft.
Maybe I could use a slightly different example from somewhere else. Well, landfill tax. Some years ago, California, which is one of the other places I live in between, was trying to put in a landfill tax with the specific intent, as I assume this bill is doing, of trying to get people to recycle more. And what happened was that people incinerated more and caused all sorts of environmental problems through that incineration. And so they had to go back and change the legislation again to be able to make sure that the purpose in the legislation was actually met. So there are often unintended consequences to the things that we do. I think, as far as I can tell from reading this, that they've tried their best to make sure that that doesn't happen. But there will, as I say, there will always be people who say, well, there's an easier, cheaper, better way for me to do this, and so I don't have to do exactly as it said in the bill.
In terms of the general anti-avoidance rule, I mean, one of the issues that has been raised with us is that there should be a formal pre-transaction clearance procedure. Now, that's not universally agreed upon, but some people think there should be, some people think there shouldn't. I guess from your kind of business experience, what's your view on a kind of formal procedure where you can kind of...
I mean, the good news in that is it gives you a degree of certainty. You can now go ahead and say, I know I'm not going to run afoul of the authorities on this. The bad news is that just like planning processes, if they turn into fairly lengthy bureaucratic processes, I mean, that can start you down the road of, well, maybe we don't want to go there because this is just getting too complicated. So there needs to be a balance struck in the middle somewhere where people do understand that there are degrees of risk they might take if they do these things without a pre-approval, but that if you want to put everything into a stack and wait for somebody to look at it and say, well, I've taken all the legal advice on this and you're absolutely clear, that can cause problems in itself.
Okay, so on balance?
On balance, I mean, I think the more guidance we can give about those things that are not likely to draw contention, then the better we would be. But I would be cautious about a pre-approval for everything.
Okay, just finally, just to make sure I heard you right at the start, this bill hasn't been formally discussed by the Fiscal Commission.
That's
working
correct.
group. It's not. Okay, thank you.
Malcolm to fold by me.
Starting with the bill, keep the convener happy. Do you believe that the tax management bill as it stands will be flexible enough to accommodate a wholesale transfer of tax powers, or do you think, if there was a wholesale transfer, would you need a new piece of primary legislation to embed the kind of principles that you have articulated in your policy paper?
My suspicion, and I'll let Andrew speak for himself, my suspicion is it would probably need some more legislation just because of the breadth of the number of taxes and the amount. I mean, remember that we'd have to take on a lot of things immediately and not be able to change a lot of things immediately. It would take time to decide how to shift and change the tax system. I don't know enough, Mr. Chisholm, about the way the legal system works here to tell you that it definitely would need primary legislation, but I would think, given the range of taxes that exist in the UK today that we would be likely to inherit, that this is probably a shade lighter than we would need to be able to tackle all of them. But I'm not expert, as I say.
Neither am I an expert, but I would agree. Yes, I would agree with that. The two taxes we're talking about at the moment are really quite specific, and you might well want to have new legislation to alter the balance between the different criteria you're trying to satisfy if you were going more general. So I would imagine it would need some more.
Well, that's interesting. I mean, I think there's been some tension in the evidence we've had so far about to what extent it is focused on the limited tax powers or to what extent it could be used for a much wider range of taxes. So we'll pursue that, no doubt, with other witnesses. Now, you mentioned that the Scottish Government, this has been mentioned already, should take a whole systems approach and take into account key interlinkages with wider policy objectives, which I think is really quite an interesting area in itself. So if I could take some examples of that. I mean, obviously you want a tax system that helps to increase productivity and economic growth, and also one that has, is a key lever for tackling inequality. So those are fairly high-level principles, but I mean, in practice, do you think, in fact, that those two objectives are often contradictory, or do you not think that is the case?
Not necessarily, but maybe. You know the joke about, for heaven's sake, find me a one-handed economist. It's a bit of that. I think. Did
your colleague Professor Stiglitz not go on about growth not necessarily leading to more equality?
No, he's very concerned about the equality angle, yeah. And growth in itself may do. It depends what else you do with the system. The productivity angle has a lot to do with trying to help investment in the right places, which doesn't in itself do anything for inequality. It's a question, again, of what the other parts of the system are doing. So I think mainly what your question is underlining is the need in general to look at these links and make sure that the taxes are, to use an old phrase, joined up in the sense that the spillovers, or maybe in the case of growth and equality, the lack of spillovers in the right places are taken care of and are built into the system. Normally you don't fiddle around with the taxes which are aiming to create the growth, the productivity growth, or the equality pressures. You build in some extra movements in other taxes which are not directed at that to take care of the spillovers from the growth to greater inequality and take it out again, something of that nature. So you do need the overview.
I think also, excuse me, I didn't mean to interrupt. I think also if you read Joe Stiglitz's book, he makes a very cogent case that inequality is something that holds back growth anyway. And so there's not always an incompatibility here. You know, that needs a discussion, I think, at a more policy political level, and then you should be designing the tax system to be able to try its best to meet the objectives that you've set out at that level. But they're not always incompatible things, economic growth and inequality. And in fact, he would argue that they are inextricably linked and that we need to solve one to solve the other.
No, I'm not suggesting they're incompatible, but I mean, it's just at certain times it could be, depending what kind of business investment it is or whatever. I mean, I suppose the other one that's very topical is oil taxation and climate change, but you just accept that you have to have spillovers and make up for it in other ways. Presumably that's what you think there.
Yeah, that's the general principle.
I mean, this has already been covered by John Mason to some extent, but the government, this is another recommendation, should put the issue of globalisation at the heart of its tax system, and no doubt we'll be asking Professor Kay about this. But I mean, just to summarise what you were saying, are you basically saying what we need is international cooperation, and that you don't actually think that the tax advantages will persist? Is that what you were suggesting for a long, in terms of?
Well, be pieces of taxation that could enhance your economic competitiveness that don't impinge on other people. You know, there may be some things that you can do that make this I mean, for example, if you were moving towards a set of taxes that pushed people towards a much greener economy here, there may well be industries that find that particularly attractive, even though you actually may have some higher taxes on other areas that they run. But in general, what I was saying to Mr. Mason was, you know, I have never worked for a company that hasn't had very sophisticated tax help to make them take their revenue in places that lowered their taxes, irrespective of which countries they happen to be in. And unless you can get some degree of cooperation from globally, then you're never going to be able to solve that.
Yeah, the other side of the coin is the other countries on the outside may do something, and without cooperation, you've got really no handle on them. So that. But if you have cooperation and formalised in some sense, you can talk to them and say, well, you know, it wouldn't be very helpful if you did that, and we might be able to do something which is more helpful to you, standard cooperation arguments. So within groups of countries, that's probably feasible. Doing it worldwide is more difficult. Singapore, Cayman Islands, etc. So I would imagine some cooperation could be very usefully introduced, but it may not involve absolutely everything.
Okay, thank you. You recommend establishing one or more fiscal rules. Do you have any suggestions about what they should be?
At length. I mean, there are a range of possible fiscal rules, and if you want specifics, what I would favour is not necessarily what everybody else would favour. Would be something which puts some controls on the public sector debt ratio, and that has implications for, if you want to get technical about it, about how you can set the primary surplus. That's before the budget balance before interest payments are made. And you might well want to have a rule which says, on average, across the cycle or some decent period of time, you balance the current budget, not the capital budget you borrow for capital purposes, which used to be known as the Golden Rule and used to be used in London but isn't anymore. It's still used in Germany to some good effect. So there are, I'm only mentioning these because these are very specific sets of rules, which is easy enough for me to dream up. Whether they're acceptable in the form of government is another matter.
Okay, I could pursue that, but I won't. Finally, the 4 principles for an independent system are simplicity, stability, neutrality, and flexibility. Others have suggested proportionality. Is there any reason why you've not included that? Or
I would have thought. I think Jim Mullies went over this at some length, and he's better than me at this. As I remember, I was a graduate student once. Yeah. The debate actually was between proportionate and proportionality.
indeed.
So, I think we would probably all agree on proportionate. Whether it's actually a good idea to have a proportional tax, which implies no progressivity or something of this kind, we might disagree. Sorry, prefer not to have.
I think we could have been more explicit about that, to tell you the truth. I mean, that was certainly in the back of people's thoughts, that there ought to be some, whether we call it proportional or proportionate system. But yes, it would have been helpful, I think, to have something in there.
Okay, thank you.
Michael, followed by Jean.
Thanks very much, Convener, and I hope the witnesses will sort of bear with me, because I'm trying to connect together some of the things that you've said in relation to the paper that you put in front of us. Malcolm talked about the connection between growth and inequality, but the third aspect of point 8 that you mentioned was competitiveness. But in relation to some of the other things you said, there were sort of real questions in my mind about how competitive or how advantageous it would be to try and be competitive based on the bill that we have and the taxes that are affected by this RSTP bill. Because one of the concerns that was raised when we were looking at the landfill tax bill, again, one of these unintended consequences that Mr Beveridge referred to in terms of California and incineration, but there was a concern about a competitive rate which would drive waste either southward from here to England, or attract waste from England to here for disposal. But you also said that we shouldn't fiddle with small bits. So is that an argument for having an all or nothing attitude to transfer of taxation?
No, I mean, I think what I'd say to that is, on the landfill tax thing, what were you trying to achieve here? Were you trying to achieve making sure that we did not have an excessive amount of landfill and drive people towards being more thoughtful about recycling? Or were you trying to actually build a waste management industry in Scotland, or both? And that might affect the way that you decided to set up the tax system. And in the one way, exactly as you say, you might have made it attractive enough that people started moving waste here, if that was what we really wanted. I suspect it probably wasn't, but if that was what we wanted, you could build that kind of business here. There are some countries in the world who've done that, as you know, particularly in things like computer recycling. There are parts of Africa who decided that they would be willing to take the risks around some of the very bad materials that bleed out of computer systems in order to bring enough work to their people, and so they import all the dead computers from all around the world. There are other countries that say we simply want to make sure that our waste is recycled to the maximum extent, and so the tax regimes we're putting in place are those that will actually allow us to do that. We don't want to build a waste management industry, so you need to start with what it is you want to do, I think.
Yeah, because that sort of leads on then to this idea of cooperation. I can understand why you would want to have cooperation as wide as possible in terms of tax avoidance, but in terms of tax setting, how extensive is cooperation required? Because we've had political arguments about Scotland being put at an advantage or a disadvantage if we have lower tax in terms of corporation tax, or when we looked at the land and building transaction tax. If people are sitting in London looking to invest, investment decisions based on whether the land and building transaction tax is higher or lower in Scotland. So how extensive does the cooperation have to be in order to try and create a situation in which neither Scotland is advantaged or disadvantaged by setting different tax rates in comparison to our nearest neighbours, who could become our greatest competitors?
I mean, I think, in my opinion, again, Andrew knows more about this than I do, I think the biggest area for cooperation for people to start with is in corporation tax. I mean, that's the place where the biggest fiddles, if you like, go on in terms of where people will actually take revenue and how they move it around the world. I think if you tried to get it across the board, you're not going to be able to do that. And in principle, you should be starting from what are we trying to achieve for us, and think about your tax system there, and then about what effect does that have on our neighbours, and is it a competitiveness issue that is going to cause them to say, foul, these people are setting up an avoidance scheme, therefore we're not going to cooperate with them anymore on these kinds of things. But I don't think you need to have a levelling of tax everywhere. I mean, I think everybody understands that you need to be competitive with things, but there needs to be some way in which people understand that there are no unfair advantages, totally unfair advantages, built into the system that might cause just a war and a rush to the bottom, if you like, by people trying to set up avoidance schemes. Is that fair?
That's really, I mean, I would emphasise again, I would start at the same point of Crawford. You have to decide what it is that you want to achieve. With that. Having said that, this is, I mean, it's a very valid point in the sense that other people are worried about this sort of thing in other contexts. When the NAFTA deal was being set up between the US, Canada and Mexico, they were very worried that what they were pleased to call the dirty industries would all go to Mexico, which had a comparative advantage in cost terms, but then and it would get rid of pollution in the US. And they put in a certain amount of legislation to try and stop that happening. The legislation actually came in terms of trying to persuade the Mexicans to have rather better labour protection laws, so that the costs weren't so low in Mexico. It's a kind of backhanded way of doing it. In the event, I think it turned out not to be so terribly important, which suggests that the competitiveness differences that you have to make these sorts of things a serious problem, actually probably larger than you might imagine. But that's a supposition from me, reading the evidence. And the last thing to say is, I don't wish to belittle anything, but the effects on the overall economy from worrying about this issue on the two taxes you have in front of you, probably not going to be huge. But the possibility that you might be worrying about this sort of thing when another tax came along would be much larger. So this is going back to the point of saying you want the framework here to be open enough to deal with other possible taxes coming later. This is my forward-looking point.
So the concerns that people expressed to us when we were looking at the individual bills about having differential rates for landfill tax in Scotland as compared to England, or land and building transaction tax, the difference would have to be quite extensive before you would either have a huge disadvantage or advantage.
I think that's right.
Yeah.
So the same would be the case for, say, corporation tax. So having corporation tax differential between Scotland and England, the difference would have to be quite vast before it would actually make a difference.
I would believe that. I think, you know, a marginal change of 1 or 2% is probably not going to cause a company to say, "Ooh, let's up stakes and move everything."
So would 3% make a difference?
I think, you know, I mean, it's something you ought to look at. But I think, as Andrew says, I mean, the other interesting thing here is, you know, it's not just the tax rate. It's also about what other things you do inside that tax rate in terms of giving people allowances and exemptions and so on. And so it's a very hard thing, actually, to sit down and say, how does Ireland compare to Germany, compared to France, compared to Indonesia? You really got to understand it at a fairly detailed level. But I think, in principle, I agree that it takes a fairly big shift in those things to the actual tax that you'd have to pay, not the headline rate, but in the actual tax you'd have to pay. It takes a fairly big shift to make you want to move your operations in some way.
There are several points in that. One of which is, not being lawyers, it's very difficult for me to know how I would frame the question, how large is large, in this context. And of course, it's going to be different for different taxes, perhaps, and so on. So I think it would be quite large, but you know, obviously you can make it large enough that it does make a difference. So on the corporation tax one, the difference between 30% in Germany and 12% in Ireland may be large, and a number of firms moved, of a certain type anyway. But then the second point that Crawford's making is the headline rate and the effective rate, you know, by the time you've taken into account all the allowances, etc., are quite different. So it is actually a complicated issue. But you're setting that advantage all the time against the other costs. I mean, it costs something to move. And it costs something physically to move because you need to move your offices, your factory, or whatever it is. You've got to employ a new labour force, etc., etc. You've got to get used to a new place, and so on. Between Scotland and England, that wouldn't be so huge because, you know, people have been doing it for years. But on a wider scale, you've got to take into those considerations into account, which, you know, when you're looking at the mobility of these things with competitiveness differentials between Scotland and England is one thing. It's different when you come to compare countries across the EU, where they've not had as much mobility, perhaps, as some people had expected. If you were working in some car factory in Spain which collapsed, it's, you know, more mobility than you would like. There's a lot of factors in there.
Yeah, well, that's certainly. I'm not sure it's been helpful in actually understanding whether this bill is fit for purpose, but it's certainly been helpful to understand some of the other arguments that have been made elsewhere around taxation differentials.
Yeah.
Although we're not really trying to talk about them.
No, I know you're
but
not.
I mean, there's also issues about the size of a business, the type of business, and whether or not it's a new operation or whether you're talking about shifting an existing operation. But I won't go down that road. Jean?
To a certain extent, I mean, this question's been answered to on the globalisation issues. that we face. And I wonder, are there examples of other countries doing this? I mean, how would Scotland, on one hand, in anticipation for some of us about having a very different control of tax-raising powers, and on the other, should we be looking at other examples, or do you have examples of small countries who have negotiated terms with other countries in order to stop that kind of tax evasion? I mean, is it actually possible?
I don't know is the answer. I mean, Andrew may know of some countries that have done this, but I don't know of any so far. I've heard a lot of people talk about it, but I've heard both here and in the US and in parts of Europe, there's a lot of discussion about how do we stop these people moving monies around the world and avoiding paying us for what. But I haven't actually seen anybody sit down and start to say, let's form a treaty about all of this so that we can actually make this happen. And, you know, as Andrew was alluding to earlier, I mean, there are places, Singapore, the Cayman Islands, other places where, you know, where it's their living. That's how they make a lot of the income that comes into them. And so they're not going to be wildly enthused about getting involved in these talks. So we may well find it easy to bring the European Union people together and talk about these things. We may be able to get a deal with the Americans, possibly with the South Americans. But, you know, beyond that, there are still going to be places in the world that say, forget all of that, you know, we can fix this for you, you know, and unless people are very smart about the legislation they put in place, then these will always be used as a means of avoidance.
It's difficult, that's for sure, because it surfaces all the time in the EU. Many EU countries would like Luxembourg to change its tax arrangements because too much money disappears into Luxembourg and is therefore savings and things outside the tax net of their home country. And there must be, I don't know the details, but there must be some arrangements, but they're clearly not very effective. So it's not easy. And that's within the European Union. If you start doing it on a wider scale, it would be difficult. So the answer to your question is yes, I'm sure I can dream up some examples. Whether I can dream up some examples where it's been really very effective is another matter. And you have to bear in mind all the time the incentives that people face. If you're a small country, it wasn't the Cayman Islands, I had an example with the Bahamas anyway, on money laundering. You come in with cooperative arrangements to try and stop this, and then you discover they're doing it anyway. And of course the incentives are such, as your question implied. What do they sell? They sell the incentive plus holidays. I mean, it's very difficult in a lot of cases. I would imagine this will increase over time. That, you know, lots of countries are concerned with this. And the one other set of examples, which is not quite what you meant, perhaps, but it's worth thinking about, is the way in which the Americans try and stop things shifting around between states, particularly on corporation tax. And they do it by saying, you know, the individual states have their own corporation tax rates, but what you as a firm will pay in aggregate will be a weighted average of the tax rates that you pay in the different states where you're operating, and the weights are usually something like employment. So you can go to the cheap place, but you've got to employ a lot of people there, and if it's cheap because it's not a very good place to go, then you don't go. So there are some things you can do.
And just the bill itself, I mean, given that regardless of any constitutional change that may happen in Scotland in the next couple of years, I think there is an expectancy at least that there will be a kind of drip feed of different taxes coming. Do you feel that the bill as it is fit for purpose for that?
I mean, from my perspective, it would seem like it depends on the taxes. You know, if other things, say like a passenger tax, something like that, transfer tax came, I think the bill could probably handle those very well. If you're suddenly dumped with everything from income tax through to corporation tax, it may not be robust enough to be able to handle all of those things.
Which is why I was saying, from my perspective, it would be a good idea to make it as forward-looking as possible so that you don't get hit by a problem that you haven't had time yet to think about.
Okay, thank you. Just a further question for myself, just following on from what Jean has said. I mean, if the bill is not robust enough to take on these additional taxes, where are the weaknesses that could be remedied in order to change that? Because clearly what we do want a framework bill that's ready for all eventualities.
Convener, I'm not expert enough to know how you would need to change it to do that. The question is it necessary at this point in time? I mean, even if I understand it, there was a a vote to become independent, you've got another couple of years in front of you before you would suddenly be asked to take on all of these complex problems. It would certainly be easy to start the transfer of the simpler taxes and go figure out on your way along, do we indeed have a robust enough bill? But you're certainly going to have time to be able to amend it in some way, I think, before you would be asked to take on more complicated areas.
Okay, thank you. That has concluded the questions from members of the committee. I'm just wondering if there's any further points you'd like to make before we wind up the session.
No, I think we were very surprised that we had as many things we could talk about as we did. So thank you very much for putting up with us.
No, thank you very much. The committee were, for the most part, fairly well behaved in terms of the areas they were asking questions about. Politics always intrudes in such matters. Anyway, thank you very much for your time and for answering our questions so frankly. I'm now going to call it a 5-minute recess to allow a changeover of witnesses and a natural break. We're all here, folks. Mobiles away, and we'll get the session underway. Okay, so we'll now take evidence from Professor John Kay as part of our scrutiny of the Revenue Scotland and Tax Powers Bill. I want to re-emphasise that we're taking evidence of the Revenue Scotland and Tax Powers Bill, and therefore I'd like to welcome Professor Kay once again to our committee. So a very good morning to you. I'm just wondering if you've got an opening, we have your paper, but just wondering if you have any opening comments that you would like to make, Professor Kay?
I've very little to add to what I put in the paper. I suppose I'm assuming in the background to all of this that we're not just here to talk about landfill and land and buildings transactions. We're really thinking about defining issues for taxation in Scotland looking forward, because these particular taxes we're concerned with are quite small in terms of revenue and not inherently very interesting taxes, but they are, in a sense, an opportunity to think more generally about principles of taxation, and that's the purpose this morning. Now, if we're thinking about taxation principles, there are many ways of, as it were, organising our thinking. And the Scottish Government has wanted to start with Adam Smith, which I can quite understand for historical reasons. But as I've pointed out, the world of Adam Smith was really rather different from the one we live in today. And there are a couple of differences that are really quite important. One is that the amounts of money that government raised then were actually inconsequential relative to the amounts of money that governments raise now. And that takes one into the implication, which we need to think about looking forward, that actually tax systems around the world depend on principally for their revenue, on three large sources of taxation, which are income tax, tax on earnings, which is some kind of social security, national insurance type tax, and a general sales tax. And therefore, if we're looking at taxation in Scotland, unless we're talking about a degree of control of one or other of these at least, we're not talking about amounts of revenue that are consequential in terms of the aggregate of the tax system. That's one large general point which I'd make. The other is to say that we need to think about jurisdiction on a Scotland in the world basis. I know you've been already doing that in the part of the discussion I had with Crawford Beveridge and Andrew Hughes-Hallett earlier. But we have to, first of all, we have to implement taxes in a global world, and that creates problems issues in relation to tax administration. But there's also a key issue that I think we need to think about, which is when we think about fairness in taxation, it really is quite important, in my view, that we think about fairness in relation to the tax system as a whole, rather than in relation to individual taxes. And the example I give, and one can elaborate this as much as you like, is to say that we can achieve a degree of progressivity, for example, through differential rates of value-added tax, and we do, by having lower rates on food, children's clothing, things like that. But actually, achieving fairness through differential rates of value-added tax is a terribly inefficient way of doing it, compared with achieving the same degree of progressivity through differential rates of income tax. And that's what I mean by saying if we think about these fairness issues on a tax-by-tax basis, we don't do the job very well. Now, one of the implications of that, I think, is what happens when, as is bound to be the case in the modern world, you have different layers of government exercising tax-raising powers. Then if all of them are trying to achieve these objectives differentially, and all of them are going to have different views on it, you're liable to get a mess of people devising tax structures that conflict with each other and against each other. And I heard in the previous discussion suggestion that maybe that means you have to as it were, have all the tax powers being exercised at a particular level. And there's plainly an argument for that. But there are also arguments against that, because you really want to have the levels of government that are spending the money being the ones that are raising the revenue as far as possible. It's not an issue that has any simple resolution. I think we need to flag it, and I think we need to discuss it. And as we think about more tax powers being devolved to Scotland in future, whatever the constitutional arrangements are, that's one of the many things that ought to be in our mind.
Okay, well, thanks very much. I notice you talked about the size of the two taxes the bill's to cover, which is between 1% and 2% of our revenue. But I'm sure I speak for the committee that having lived, ate, slept and breathed those taxes for a number of months, we were still a bit wounded by those comments, but never mind.
Perhaps you could think of it as practice, Chairman.
The first sentence says that Revenue Scotland is a grand title for a body that administers two modest taxes. And I think that does come to the rub of it, because I think the point is, of course, that this is a framework bill which hopefully will enable further taxes to be administered as they're devolved, or whatever the case may be, depending on possible constitutional change. But I want to go into some of the things that you've just kind of commented on, and indeed your paper. And you said, for example, in your second general comment, that, and I quote, "Experience suggests that the level of government at which it is most efficient to raise revenue tends to be higher than the level of government which is most efficient to plan expenditures." So I just wish I wonder if you can talk us through that a wee bit, and the implications for Scotland, particularly in terms of the further progress of this legislation.
Yes, everywhere in the world, really, you have different levels of government, and it's obviously appropriate to that, because, some things are best done at very local level. To take the extreme case, you want, as it were, parish councils or levels of government like that deciding, what will be in the village hall or the town square. So at the other end, if you're dealing with climate change, that's a global issue, and you want to be making decisions at some kind of global or multinational level. So that the functions of government are tiered in that kind of way. But what we've tended to find when we allocate expenditure to appropriate levels of government is that the levels of government tend to be lower than the ones at which you naturally collect revenue. So almost everywhere around the world where you have these multiple layers of government, you have the top levels of government collecting more and then distributing part of what they raise to the lower level authorities. Now in Britain, if we look at the way we deal with local authorities, we've actually taken that very far, because getting on for 90% of the money that local authorities in the UK today spend, actually comes down to them from central government rather than being raised from people locally. And that's actually too large to get efficient and responsible decision making, I think, working well at lower levels. So we have to have some sort of compromise between distributing the revenue down and giving people the sort of authority they need and the revenue collecting powers they need in order to match the level at which you raise revenue with the level at which you incur the expenditure.
I mean, so obviously, even with the 2012 Scotland Act, the share of revenues that will be raised in Scotland would be about 15%. Is it your view that that is too low a figure? What would you believe would be optimal, the range, the optimal range, for example?
Well, I think optimal is getting on for 100%. But if we were to get to 100%, we have to talk about having some of these big taxes being levied in Scotland separately and levied by you in this Parliament here, and that's a very different world. Okay, it's also a difficult world because these big taxes, some of them don't lend themselves very well to being administered even as lower level, if one can call it that, as Scotland, as I think I described in the note.
Yes,
It seems to me VAT would be, frankly, best levelled, just most efficiently collected at a European level rather than a member state level.
Absolutely. Comments on that, and I'm sure members around the table will have a variety of different views on that. You also talked about, in the UK today, we talked about income tax, VAT, national insurance, and you said for a government to raise significant revenue, it needs to be involved in at least one of these, and these were the three taxes that you touched on. I'm just wondering what you consider to be significant in terms of revenue as a percentage. I know it's a very difficult question to answer specifically. I'm just wondering what you would consider a significant tax in terms of...
And we have the three dominant ones I've described.
Exactly.
Then we have the small ones, like the ones that are in this bill, the landfill duty, the building and land transactions tax, which are, as you described, 1 or 2%. Then there are just 2 or 3 that are somewhere in between. There's corporation tax, there's the ad hoc excise duties on particular elements. There's the special regime, which we might want to talk about and is clearly very relevant to Scotland in relation to the North Sea oil. Things that are not small taxes of the kind we're talking about in the bill, but don't, as it were, make it into the big league of taxes either. But there aren't very many of them. There are about 3 or 4 of that kind.
And which do you think would be, in terms of this bill, if we were actually, this being a framework bill and there were additional taxes to be devolved, which ones do you think would be the simplest, effectively, to add to the list of those we already have devolved?
Well, simplest are
simplest
are other
an economist's point of view. Sorry.
Yeah.
Yes.
Simplest are other ones of not much consequence. Like air passenger duty. I think if we're getting serious about this, we have to be talking about one of the the other 2 groups I was talking about. The intermediate group, the North Sea oil, the corporation tax. And perhaps the excise duties all have problems of their own. Excise duties, it's possibly feasible, but it's... so I think you're driven, right, corporation tax and North Sea oil have their own special problems. So I think we're talking about the other 3 and probably most about national insurance or about income tax.
Okay, thanks very much. I'm going to uproot the session to colleagues round the table. The first person to ask questions will be Malcolm, to be followed by Jamie.
If I can start with the point, in fact, the convener started with, because I may have not totally understood, but I'm slightly confused because, I think towards the end of your opening statement, you said the level of government that spends money should also be the level that raises it, and you said optimally 100%, which to me seemed to contradict the most striking thing about your paper in terms of the level of government at which is most efficient to raise revenue tends to be higher than the level of government. So is the distinction there between what actually happens and what you would like to happen? Because when I read your paper, I assumed that you were actually saying this was an efficient and good thing.
2 contradictory considerations, really. One is, if you ask who is good at raising taxes, you tend to be looking at higher levels of government. Right. So that from the point of view regarded narrowly as efficiency in taxation, you tend to want to go to highish levels. Right. If you want efficiency in determining expenditure, you go to lower levels. And if you want them to manage the expenditure well, you have to match the expenditure raising, the tax raising capability with the expenditure responsibility. So you have 2 desiderata which basically conflict with each other. We want to raise taxes well on the one hand. We want to have responsible government that's responsive to local people and is responsible for raising its own revenue. And these 2 desiderata just are in conflict with each other.
So in that sense, efficiency for you is not an overriding consideration. In fact, you tend to think that the raising the money you spend is a more important principle than efficiency? Or
No, they're really different aspects of efficiency. One is how good you are at raising the revenue. The other is how disciplined you are about spending it.
so you don't have a view, or you have suggested that you would like to see local government raise more of its money, and I don't know if you...
Yeah, right. I think when we're making a balance of this kind, all we can say is, in some respects, we've gone too far in one direction or not far enough. Now, I think it's very clear in terms of local government in the UK that we've gone too far in terms of centralising the collection of revenue, and that we would have better, more responsible and more responsive local government if local government collected more of its own revenue. And actually, I think the same is true in relation to the Scottish government, that the Scottish government would just work better. If the Scottish government actually, this is within the current constitutional framework, if the Scottish government actually raised more of its own revenue and received less of it in a block grant from Westminster. And I think now probably almost everyone, agrees in that, with that observation, and the post-Kalman reforms are pushing in the direction of making that more possible and more true.
But in terms of multinational companies, and presumably that's referring to corporation tax and perhaps some other taxes, do you think it's not gone far enough in terms of it needs to go higher because of tax evasion, basically, or for other reasons?
Yeah, right, because of tax evasion and avoidance, really. That stripping out on a country-by-country basis the origin of the profits of companies with complicated multinational businesses is just too hard. That's one problem. And there's a second problem, that we've had a bit of a race to the bottom in terms of corporation tax rates, of companies trying to attract either economic activity, countries trying to attract either economic activity or the appearance of economic activity, because in some cases it isn't very real, by setting lower rates of corporation tax than their neighbours.
I mean, it's not so obvious why you would want to... Well, I mean, I think there already are quite a lot of European constraints on VAT, but there's obviously a lot of nation-state discretion, so it's not quite so obvious why you would want to eliminate the nation-state discretion that is available on VAT. It would be quite so obvious to me why that would be desirable.
Well, Rod, I think the single market really implies common tax rates on goods and services. And at the moment, we have a rather messy regime of payments and refunds, in some circumstances, but not others, when transactions, cross borders.
So you think that that's an implication more of the single market?
Yes, I do.
And does that have implications for other taxes? Obviously, there is quite a lot of discussion about more fiscal harmony in the EU, but from the point of view of your principles, would there be other taxes that would be caught by that, do you think?
I think VAT and corporation tax are the ones that one would like to be pushed towards, or efficiency in collection would push one towards higher levels of administration.
So obviously, well, that's connected a bit by your point on the last page about VAT. So are these specifically UK? I don't know how it works in other countries, but are these specifically UK variants? Having zero rating for certain goods and so on, or does that happen in other countries?
Yes, right. As you know, zero rating is a particular UK dispensation, right? And it's actually one of the questions in independence discussions, because of course there's a question of whether that would be acceptable in the different framework.
But you're also making the more general point that you think anyway, irrespective of the EU dimension, you would rather not have these complexities within VAT. But I mean, I suppose one of the counter arguments to that is you're saying put it all onto income tax, but I suppose zero rates of VAT help people who are not actually in work.
Yes, they do. Right, and when when I talk about the tax system, one has to think about the tax system and the benefit system
So you'd have
taken
to have compensating
together.
action in the benefit system.
But, right, but actually, taxing lower rate taxation on the clothing of all of our children is a fairly inefficiently targeted way of helping poor households.
Well, we could
And I'm not
discuss-
sure the food I eat needs to be zero rate.
Okay, well, that leads into a much wider argument, which we won't visit at the moment. Now, here's an interesting statement. Ability to pay is not a precise and perhaps not a helpful comment, and I'm not sure if that's related to the comment about Adam Smith's proportionate to ability to pay is inadequate, even as a starting point for vertical equity. So I don't know if you want to fill us in with, I don't know if those two are complementary or not.
Yes, at its simplest, I don't think ability to pay is a concept that has the same kind of meaning in today's world as it had in Adam Smith's world, when the vast majority of the population were actually on essentially subsistence incomes. And the general point which I made, which is to remember that really until the Second World War, most people in this country paid no direct tax and did not pay very much tax, at all. Today, everyone pays quite a substantial amount of tax, and it's inevitable if we're spending 40% of our national income on public expenditure, that everyone will pay a substantial amount of tax. So I think we should think about this in terms of fairness of the distribution of the overall tax burden, and that's the way in which we should look at it. Do we feel that overall result is right in terms of the relative tax burden on different households? And even there, I've elided something. Do we mean individuals or do we mean households?
Indeed, yeah. Well, I'm just struggling slightly because fairness and ability to pay seem to me to be in the same territory.
They're in the same territory. I'm not sure they have the same meaning, right? But I'm not sure I want to get into that argument because I'm not sure we're arguing about substance rather than about the words.
I think we'll leave that sticking to the
words
ball.
which
Okay,
we
thank
pay.
you.
Jamie.
Thank you, Convener. And already, Professor Kirby touched on the principles you believe should underpin they should be the hallmarks of a tax system: efficiency, fairness, and administrative feasibility. So, insofar as the Revenue Scotland Taxpayers Bill could go towards achieving those ends, how do you think it achieves that?
Well, these are clearly not too difficult to administer taxes so long as we don't complicate them very much. And indeed, the Land Buildings Transactions Tax, frankly, doesn't have very many merits other than that we can administer it. It's not the kind of way we would want to tax, in my view, the occupation of land and buildings in an ideal world, but it's the way we can in a less than ideal world. What I'm suggesting, and it might be now the moment to spell it out, is that if you're talking about taxes that raise 1 or 2% of revenue, then talking about fairness in relation to these taxes is something that has fairly limited applicability. These are not going to be the ones that contribute to the fairness of the tax system as a whole. Fairness is really, to my mind, in relation to these taxes, primarily a matter of ensuring that people in similar circumstances are taxed in similar ways, which is why, say, the slab system of collecting the tax is quite a bad idea because it taxes people in not very different circumstances in materially different ways. But I think that's a relatively minor part of the total.
But of course, fairness could also be about how people are treated by the tax authority. I mean, in terms of what's being established here, Revenue Scotland, what's been envisaged. Do you think it goes some way to meeting these general principles, efficiency, fairness and administrative feasibility?
Yes, I do. Right, I think we're...
Okay. And you started to explore the area I wanted to explore further, and I know you said these two taxes are boring, although it raises the interesting question to me, what would be an exciting tax? I struggle to think of one, and you've started to touch on the successor to stamp duty.
I wrote a book about taxation that several people said was the only interesting book about taxation they've read. So I think most subjects are interesting once you get into them, and I'm sure you've found that in this committee of these taxes.
All good publishers. Indeed, Fisky. I have to confess I've not read your book, but I shall endeavour to do so. But you talk about stamp duty, and you say it's a bad tax by most criteria. You alluded to that there, and you say it's a poor mechanism for achieving it progressively. But you did talk about the slab structure that has existed previously. We know that's not going to be the case for LBTT. So, insofar as possible, do you think what they're doing here is?
I think, are we doing the right thing in Scotland? Yes, I do on that.
And also
And I'm surprised it has gone so long without the UK having come to a more sensible position on that.
Okay. Landfill tax, you also talk about us, the committee, resisting the thought that ever more elaborate attempts at engineering its complexity would make it better still.
Yeah.
What did you mean?
I mean, at the moment we have broadly two categories of landfill. I think it was very easy for people to sit in this room and devise what look like more elaborate theoretical structures that differentiate between different kinds of activity according to how toxic they are, how quickly the landfill, the stuff that's put to landfill degrades, and some of the issues that were being discussed earlier about whether we want to encourage or discourage particular industries. I'm very conscious in my experience of politicians getting involved in taxation that they're often quite keen to have these discussions, and they're often lobbied by particular business groups to have these kind of discussions. And I think they're the source in general of a great deal of complexity in our tax system, with rather little benefit or often disbenefit, and are also often a very elaborate fruitful source of avoidance, because as soon as you create more complications of that kind, you're giving people incentives to put things into one category rather than another. So that's why I say kind of first do no harm is my rule of taxation there, that we should be quite modest about the ways in which we think we can make things better by tax elaboration.
Okay, thank you.
Thanks, Convener. Yes, I mean, I think on your final point there, we did try and do that with the land and buildings transaction tax, because there was quite a demand for, if houses were very energy efficient, they got a special rate and things, and we resisted that, I think. I mean, it was interesting in your paper generally. The concept of taxes efficiently collected when the payment is combined with some other beneficial transaction, I thought was an interesting one. It's not something I think we've looked at terribly much, but I mean, it's common sense in a way that if you pay tax with your salary, you kind of just accept it, or VAT on your shopping and probably buying a house, whereas other things are, when you've actually got to write the cheque, it's a bit more unpleasant, I suppose. I just wonder how you feel that fits in. In the past, I remember people saying that the taxation on new motor cars was the most easily collected in the whole of the UK. I think it was about £1,000 on a new car, and yet that was dropped. And I just wonder if you think there's other areas we should be. I mean, inheritance tax and capital transfer tax are other two. Well, we don't have capital transfer tax anymore, but in a sense that was one where there would be an example of that. Is that the kind of thing we're thinking of?
Yes. I mean, the biggest example we have is really in relation to the transactions tax in relation to property, Because I know that a couple of weeks ago, for example, Professor Merlis told you, and I would agree with him, that it would be much better to have an annual tax on the value of property. But we've had annual taxes on the value of property, and we've discovered that they're pretty much the most unpopular taxes around, because people actually have to write out cheques for them. Yes. In truth, inheritance tax has some of the same problem, although it actually needn't I suspect if we collected it slightly differently. It's the point you made that if the money just goes out when your salary is coming in, if the money is paid over when you're buying in the shop something you want, you pay the tax without really resenting it. When you just have to write out the cheque and you get nothing in return or nothing directly in return, you say, I don't want to pay that. And it's not just the political resentment that you get from that, it's the consequences in terms of people resenting the overall level of taxation and trying to think of things they can do to avoid it.
Thanks. I mean, I think it's an interesting point, and it made me think slightly differently about some of a whole range of taxes that it would apply to. I mean, your point too about, in some cases, or in many cases, it's better collecting the tax at a higher level, and I take that, and we discussed the corporation tax earlier on. I mean, I've sometimes had the thought that one way of helping local authorities to raise more tax as a proportion of what they spend would just be to allow them to start their own taxes. For example, if Edinburgh or the Highlands wanted to do a bedroom tax for tourists, let them do it, but Glasgow and Dundee might not want to do. I mean, is that a kind of bad way of thinking, would you say, that because then it becomes very bitty and inefficient?
No, I don't think it's a bad way of thinking. But you're going, as you described, to a very variable capacity actually to do that, so that you're pointing out, I fear correctly, that Edinburgh is a lot more tourists than Dundee, and that gives them, as it were, gives Edinburgh a double benefit. As more tourists, and you can impose the tax without deterring people from going there. Whereas Dundee, which would, I guess, rather like more tourists than it gets. Actually, I'm going to Dundee tomorrow. And I was realising there are some attractions in Dundee now that I actually want to go and see. But, right, yes, I think we should give local authorities more scope to raise revenue for themselves. But then, we get to what is one of the key difficulties in all of this, and one of the reasons why we have this phenomenon of tax being better raised at the higher level, that it's actually quite difficult to pin down the place which you associate with a particular economic activity. And that's why a tax on tourist bedrooms, works, because you know where the bedroom is. A tax on land and buildings works, because you know where the land and buildings are. It's when you get round to you're still not too badly when you have a tax on people's work, because in the main you know where they're doing it. When you have a tax on capital income, it gets more difficult. When you have a tax on and when you have a tax on corporate profits, it gets more difficult still. It's a matter of how easy it is to identify the economic transaction with a particular place. And the harder it is, then the more difficult it is to push that tax down to a lower level.
Okay, thanks. I mean, a point that Malcolm Chisholm touched on earlier was the whole question of ability to pay, and I think I'm still struggling a little bit to get my head around that. I mean, VAT takes no account of ability to pay, but obviously it's a major tax, not just this country, but throughout Europe, certainly. Would your argument be then...
Well, it does in the sense that the more you spend, the more you pay.
Yes, but it does mean that if a well-off person buys a shirt,
he pays the same VAT as the bad
as a poorer person buying the shirt. I mean, is your argument that we just live with that, and through the income tax system and the benefit system, we kind of compensate for that?
Largely it is, yes.
Yes.
That we do it much better that way than by differentiating, for example, between expensive shirts and cheap shirts. You know, and we've gone down that route, and kind of madness lies, you know, at the end of it.
Right. Because it becomes incredibly complicated.
Yeah, it's the world we got into the 1970s when, you know, the government decided to keep down the prices of cheese, and then you had to decide which cheeses were luxury cheeses and which were everyday cheeses. And my strong view is we just don't want to go there.
Yes. Well, I'm personally very sympathetic to the idea of maximising simplicity, I have to say, in the whole thing. I mean, another area you've not specifically, I think, mentioned in your paper, but came up in the previous session, was the whole idea of only making small changes in tax rates in the tax system, and that, I suppose, reassures taxpayers, companies, individuals that, you know, this is a kind of stable country and we're not going to do anything silly, as compared to we see somebody making a big profit and we do a windfall tax. What's your thinking in there?
Yeah, right. I think in general windfall taxes are a very undesirable idea. The idea that we, you know, move around from time to time picking on whoever happen to be the bad guys at the moment in popular perception, and impose a tax on them. On the other hand, especially in the world of corporation tax we're talking about, where it's difficult to collect corporation tax appropriately on commodities, there's something to be said for ad hoc regimes of taxation on particular products. Now, there are two examples of that in which one comes to mind in relation to Scotland. One is oil, where at the moment we do it, you know, that in order to have deal with the problem of the fact that oil is developed by companies that operate multinationally, we essentially have a ring fence around North Sea activities. We tax them just on what happens in the North Sea as far as corporation tax is concerned, and we have a variety of special taxes on North Sea activities. So we say this is a uniquely profitable activity, or it's a specially profitable activity that deserves to be taxed in a special way for that industry because we can collect it. We do the same in terms of one or two other industries like gambling, you know, where we tax casino profits and bookmakers' profits on the same kind of basis, saying this is a mobile industry and it's a specially profitable industry that we have a special regime for. There's another commodity, when one thinks about Scotland, that falls into a similar category to my mind, and that's whisky. I just put that thought out for this committee.
Yes, it was just as you were speaking, I remembered that you'd suggested that before. Thanks very much, that's great.
Okay, thank you, Deputy Convener. Now, in terms of this bill, Professor Kay, do you think it provides the correct framework for the addition of further devolved taxes, or indeed taxes, should Scotland vote for independence in future? Do you believe that it has the capacity to do that?
Well, it's going in the right direction, but the Revenue Scotland you're creating is not going to have the capacity to administer, you know, one of the big taxes we're talking about. It's going to be a very different organisation, you know, before it could. And actually, if we were to have a genuinely separate, you know, income tax within Scotland, and if I talk about the three big taxes that I was describing, it has to be, I think, either income tax or national insurance, social security tax. Then you're talking about an organisation with a very different capacity and staffing, if you're to have the capability of administering that, rather than as we're doing in the current regime of having a Scottish administered element in income tax that is really just, you know, a subset of the UK income tax.
Okay, so I mean, obviously capacity would be an issue, and one would expect Revenue Scotland to look to expand its capacity. But in terms of the legislative framework, you know, does that still need tweaking, as opposed to the issue of, you know, for example, having enough personnel? I mean, do you think the actual structure itself is the problem?
It looks okay to me, but I think you will have other people talking to you who are more expert on that side of things than I am.
Now, another point in the bill is the general anti-avoidance rule. I mean, one of the concerns which has been expressed about the UK taxation system, 11,400 pages, there's probably no one on earth who actually fully understands it comprehensively. How could you, unless you the mind of a computer and did nothing else but read this stuff? And of course it's kind of become a bit of a hydra as well in terms of developing, and whenever loopholes are closed, the other ones apparently open. I mean, what are the benefits, do you think, of bringing in a general anti-avoidance rule in terms of this new legislation we're having here, because it is new and we're effectively starting from scratch? What opportunities does that present?
I mean, I support the idea of general anti-avoidance provisions, but, you know, my sense is where they've been implemented, you know, they've generally produced rather less than, you know, than people had hoped for from them. And part of what I think is underlying this problem is I'm not sure that we couldn't do a great deal more if we were really serious about avoidance to deal with it under existing frameworks. We've been talking this morning, both in the previous session and in this session, about avoidance and evasion as far as corporation tax is concerned. I think a lot of what is currently happening is because of a kind of consensual attitude that has been built up over a long period of years about what people are actually allowed to do. And I think if we were a lot more aggressive about that, we could have a very different setup. You know, a lot of these profits, it seems to me, are not actually in any ordinary sense of the word being earned in the Netherlands. A lot of these sales are not in reality taking place in Ireland. And if we were to challenge them on the basis of economic and commercial reality, rather than the way in which the transactions are being formally described, we would be able to challenge them under the kind of legislation we have at the moment. It's the willingness to do it.
I think a lot of us, I'll let you in a second, I think a lot of us lay people, if you like, because in terms of taxation law, we're all lay people apart from our distinguished Professor McEwen here. A lot of us think, you know, if the money's earned here, the tax should be paid on it here, full stop, and I think a lot of us struggle as to why that isn't actually the case. I mean, we realise there are all sorts of complexities involved, but it seems to us that's a pretty obvious and straightforward statement, and there seems to be a lack of willingness of government at UK level to address that. Sorry, I'll let John in.
Yeah, I think it's not quite as simple as your description implies, but it's not quite as complicated.
Exactly. I appreciate it's not as simple as I imply. I realise there's the balance is in the middle somewhere.
Well, it was on that point, that's why I was asking for supplementary. I mean, is that because the UK, and it's probably not just the UK, but the UK has been taken a very legalistic view on the legislation, and the courts have tended to look not at the principles as you describe, where it's the transaction taking place, but they've looked at just the letter of the law, and we've got very bogged down in the letter of the law, and tax experts, including accountants, have, you know, kind of benefited from that. Is that the key problem?
I'm not sure it is. Firstly, I think it's a general problem and not particularly a British problem. Secondly, not many of these cases actually go to court, right? And there are odd cases I know of that have gone to court where the courts have taken a rather more robust view than the revenue or HMRC have been naturally used to taking. So I'm not sure it is a legalistic problem.
So you're saying
the source of the difficulty. Right. I think a lot of it is just rather easier for HMRC or be it Revenue Scotland in future to take a conciliatory view and negotiate an agreement with a large company than spend years fighting them in the courts.
even that when that costs the taxpayer sometimes hundreds of millions or even billions of pounds, as has been argued in terms of some cases, Vodafone
Right.
being an obvious one.
And of course, in individual cases, it might not be, some simple cost-benefit analysis of the cost of litigating, might not be worth it or not spectacularly worth it, but it might be worth it in terms of the aggregate impact.
Because I think we've all been in a situation where we've been hunted, because we're a tenner short or something like that, or tax-free, or having a letter when you're like 45 pence or some ridiculous amount of money and allegedly underpaid, as I know people have had. Professor, I'd like to thank you for your contribution this morning. As always, when you come to Finance Committee, which is not as often as I think we would like, you're certainly very thought-provoking in terms of your deliberations and your evidence too. So I'd like to thank you for that. Is there any further comments you want to make to the committee?
No, I think we've had a useful discussion this morning, and thank you for having me.
Well, thank you very much. Hope to see you again before too long.
Right.
Thank you. So that being an end to the public session this morning, we're now going into a private session, so therefore close this public part of the meeting, and we'll just have a couple of minutes break to allow the witness and official report and members of the public to leave.